Hello, and welcome back to Dinar Daily, your dedicated source for clear, factual information regarding the economic landscape surrounding the Iraqi dinar. For anyone who has been closely following developments in Iraq's economy and its currency, the current period is filled with noteworthy events and policy discussions. In this comprehensive report, we will embark on a detailed exploration of the multifaceted factors shaping the dinar's status in the latter half of 2025, we aim to provide a thorough understanding by examining the interplay of macroeconomic indicators, central bank policies, and market dynamics. Our focus remains strictly on presenting the available information, allowing you to form your own informed perspective on a subject that continues to capture significant attention across the globe. We will dissect the foundational elements that contribute to the currency's current standing, providing a clear and unbiased overview for our viewers. As we assess the situation in mid-2025, it is crucial to establish the official status of the Iraqi dinar. The Central Bank of Iraq has not announced or implemented any formal revaluation of the nation's currency. The official exchange rate in relation to the US dollar has demonstrated a pattern of relative stability, with only minor adjustments occurring over time. These small fluctuations are typical for managed currencies and are generally reflective of broader economic forces, such as shifts in national inflation rates, the vital flow of oil revenues into the state's coffers, and the deliberate monetary policy decisions made by the central banking authority. This official stability stands in contrast to the more fluid environment observed in other markets, creating a dual landscape that requires careful observation and analysis to fully comprehend. While the official channels maintain a steady course, a different and more dynamic story is unfolding within the parallel or informal currency markets. In these settings, which operate outside the direct control of the central bank, sentiment and speculation play a much larger role in day-to-day rate movements. Traders and local citizens participating in these markets often react swiftly to a wide array of signals, including unconfirmed rumors, subtle shifts in economic data, and perceived changes in political sentiment. It is within this environment that one can observe a more granular response to the economic and political climate. This highlights a significant divergence between the centrally managed official rate and the sentiment-driven rates found in local exchanges, a key characteristic of many economies with managed currency systems. The current environment can best be described as a period of observation and anticipation, where various economic and political components appear to be gradually aligning. Though no definitive outcome has been realized, it is important to approach the concept of currency revaluation with a nuanced understanding. The term does not exclusively refer to a dramatic, single-day increase in value. In practice, a strengthening of a currency's position can manifest in more subtle ways over an extended period. This could include a progressive tightening of the spread between the official and parallel market rates, a series of carefully worded policy announcements from the central bank, or a gradual and controlled appreciation of the currency's value over several months or even years. For many observers who have tracked the Iraqi dinar for a considerable length of time, the central question revolves around identifying tangible signs that a new economic phase may be approaching. The discourse is shifting from one based purely on long-term speculation to a more immediate analysis of current economic indicators. The key is to discern whether the ongoing developments are merely part of the regular economic cycle, or if they represent the preliminary stages of a more structural shift in Iraq's monetary policy. Analyzing these early signals requires a deep understanding of the country's economic foundation, its primary revenue sources, and the intricate political factors that influence financial decision-making at the highest levels. At the very core of Iraq's economic structure lies its immense oil sector, which serves as the primary engine of the national economy and the principal source of government revenue. Consequently, any significant movement in the global oil market has a direct and immediate impact on the country's financial health. The government's income, foreign currency reserves, and overall budget are intrinsically linked to the price of oil and the production quotas set by international bodies like OPEC. Understanding this, Dependency is fundamental to any analysis of the dinar, as oil revenues provide the financial capacity for the government to support its currency and implement its economic agenda. The strength of this sector is a prerequisite for any potential monetary strengthening. Recently, the global energy markets have witnessed modest but notable increases in oil prices. This trend has been influenced by a combination of factors, including heightened geopolitical tensions in various parts of the world and strategic production decisions made by OPEC and its allies. For Iraq, higher oil prices translate directly into increased government revenues, creating greater fiscal flexibility. This enhanced financial breathing room can empower the government and the central bank to pursue policies that support the national currency more robustly. Sustained strength in oil revenues is widely considered a foundational requirement for any durable effort to tighten monetary policy or engineer a controlled appreciation of the Iraqi dinar. Of course, the economic equation for Iraq and its currency is far more complex than a simple reliance on oil revenues. A multitude of other factors, including the domestic political climate, the pace of internal economic reforms, and the state of Iraq's international diplomatic and trade relationships, all exert significant influence. Political stability, in particular, is a critical variable. A cohesive and functional government capable of implementing a consistent, long-term economic strategy is essential for building the kind of investor confidence that can support a currency. Therefore, while strong oil revenues provide the necessary resources, they are but one piece of a much larger and more intricate puzzle that determines the dinar's trajectory. The actions and communications of the Central Bank of Iraq are under intense scrutiny from economists and market observers. In recent months, the institution has been implementing a series of measures aimed at achieving greater control over the domestic money supply, stabilizing the rate of inflation, and bolstering public and international confidence in the Iraqi dinar. These policies are often technical and subtle, but they provide important clues about the central bank's strategic direction. Observers are closely watching for any signs of increased intervention in the foreign exchange markets, sustained efforts to reduce the country's reliance on printing new currency to finance deficits, and the enforcement of more stringent prudential regulations on the domestic banking sector. These carefully calibrated steps by the central bank are interpreted by many analysts as preparatory work for a potential shift towards a stronger currency policy in the future. Rather than a sudden, high-impact change, the prevailing analysis suggests that any adjustment would likely be gradual. A soft revaluation, characterized by a series of small, incremental appreciations, may be a more probable course of action than a single, dramatic event. Such a strategy would allow the economy to adjust more smoothly and reduce the risk of market shocks. If the central bank were to begin methodically guiding the official rate higher or taking explicit steps to narrow the gap with the parallel market, it would be widely regarded as a definitive turning point in its monetary strategy. Political stability remains one of the most crucial and often unpredictable variables in the equation for Iraq's economic future. The country's political landscape is frequently characterized by shifting alliances within its parliamentary coalitions, ongoing debates over key ministerial appointments, and questions surrounding long-term policy agendas. This environment can create uncertainty, which in turn affects investor sentiment both domestically and internationally. For the dinar's outlook to strengthen significantly, a period of sustained political calm and clear, predictable governance is considered essential. The ability of the nation's leadership to present a unified and investor-friendly economic policy is a key factor that can build or erode confidence in the country's financial future. A strong and sustained commitment from the Iraqi government to a long-term economic vision could profoundly improve the dinar's prospects. Such a vision would necessarily involve concrete plans for economic diversification, reducing the nation's heavy dependence on the volatile oil sector. Furthermore, significant public and private investment in rebuilding and modernizing The country's infrastructure is seen as critical for sustainable growth. Enforcing strict fiscal discipline to control government spending and manage debt is another vital component. Should Iraq successfully embark on this path, the foundational support for its currency would become substantially stronger. Conversely, any renewal of political turmoil or significant delays in governance could easily negate recent positive momentum, potentially derailing or delaying any potential currency adjustments. The parallel currency markets offer a real-time glimpse into grassroots economic sentiment and speculative activity. Across the informal exchange houses in major Iraqi cities such as Baghdad, Erbil, and Basra, the behavior of traders provides a constant stream of data. These market participants are often the first to react, nudging rates in response to the faintest whispers of potential policy changes. Anticipated inflows of foreign currency, or shifts in local demand for dollars. The spread, or the difference between the official rate and the rates found in these markets, is a keenly watched indicator. A consistent narrowing of this gap is often interpreted by speculative traders as an early signal that market participants are beginning to anticipate an official move towards a stronger dinar. However, it is critically important to interpret the signals from the parallel markets with a great deal of caution. While these markets can sometimes act as a leading indicator, their movements are not a guaranteed predictor of official policy. They are highly susceptible to rumors and can be influenced by factors that have little to do with the underlying macroeconomic fundamentals. Parallel market rates have been known to overshoot reasonable valuations in both directions and can correct sharply and unexpectedly. Therefore, while their behavior provides valuable insight into local sentiment, it should be considered as just one of many data points in a comprehensive analysis, not as a definitive forecast of future events. Another significant factor to monitor is the flow of capital related to the Iraqi diaspora and foreign investment. The financial activities of Iraqis living abroad can have a tangible impact on the domestic currency market. If a trend emerges where a growing number of expatriates seek to repatriate their funds, converting foreign currency back into Iraqi dinars to invest in the local economy, it can create upward pressure on the dinar's value. This increased demand for the local currency tests the central bank's policies and its management of foreign exchange reserves. Similarly, trends in foreign direct investment are a powerful indicator of international confidence in Iraq's economic stability and growth prospects. A noticeable increase in foreign capital being injected into key sectors of the Iraqi economy would be a profoundly positive sign. Investments in areas such as infrastructure development, the energy sector beyond simple extraction technology, and other non-oil industries signal a belief in the country's long-term potential. Such inflows of foreign currency directly contribute to the strengthening of the nation's foreign reserves and can provide substantial support for the appreciation of the dinar, or at the very least help it resist depreciation pressures. Consequently, closely tracking data on capital inflows, remittance trends from abroad, and official foreign direct investment figures is an essential component of assessing the dinar's medium to long-term outlook. A balanced analysis requires a thorough examination of the potential risks and headwinds that could impede progress. First and foremost, domestic inflation remains a persistent threat. If the cost of goods and services within Iraq continues to rise rapidly due to supply chain constraints, high import costs, or other currency pressures, any nominal gain in the dinar's exchange rate could be effectively nullified by a loss in real purchasing power for the average citizen. This is a critical concern for policymakers, as currency appreciation without inflation control does not lead to genuine economic improvement. The central bank's ability to manage inflation is therefore a key variable in the success of any future monetary policy shift. Beyond domestic challenges, Iraq's economy is also vulnerable to external shocks. The country is situated in a geopolitically sensitive region, and any escalation of regional conflict could have immediate and severe negative consequences for economic stability and investor confidence. Furthermore, the economy's reliance on oil makes it highly susceptible to a sudden crash in global oil prices. The imposition of new international sanctions, or shifts in global trade policies, could also reverse any recent gains. On a global scale, major monetary policy shifts, such as aggressive interest rate hikes in the United States or Europe, can strengthen the US dollar and apply significant downward pressure on emerging market currencies like the dinar, complicating the central bank's objectives. Given the complex interplay of these numerous factors, establishing a precise timeline for any potential change in the dinar status is not feasible. However, many economic analysts who follow the region suggest that if a shift were to occur, it would likely be a gradual process unfolding over the next 12 to 24 months. This assessment is based on the assumption that Iraq is able to maintain a reasonable degree of political stability, that oil revenues remain robust, and that the government continues to pursue a consistent and prudent policy path. The likelihood of an abrupt, dramatic overnight revaluation is considered low by many observers, as such an event could severely shock the domestic market, place immense strain on foreign currency reserves, and potentially cause significant economic instability instead of a sudden event. A more plausible scenario, according to some economic analysts, would involve a carefully managed, phased approach. This could begin with the central bank working to tighten the spreads between the official and parallel market rates. This might be followed by a period of small, incremental appreciations of the official rate. Only after these preparatory stages might a more formal announcement be made, which would then be followed by a controlled and gradual shift to a new valuation. If the market begins to see more definitive statements on currency policy or clear guidance on the exchange rate from the Central Bank of Iraq in late 2025 or early 2026, many would interpret that as the formal beginning of such a process. For those interested in navigating the practicalities of currency exchange, particularly with a less commonly traded currency like the Iraqi dinar, understanding the standard process is essential. The initial step is always to contact a financial institution, such as a bank, to verify its capability and willingness to handle the transaction. It is imperative to prepare all required documentation in advance, which typically includes a valid government-issued ID and potentially proof of how the currency was acquired. As per anti-money laundering regulations, the physical currency notes themselves should be clean, sorted, and intact, as damaged or unreadable bills are often rejected by banks. This preparation can help streamline what is often a multi-step process. Before committing to any transaction, it is crucial to request a full and transparent disclosure of all associated costs. This includes the exact exchange rate being offered, the spread the bank is applying, any commissions and other service fees. Once the terms are understood, the dinars are submitted for processing. This is rarely an instantaneous procedure. The bank will typically need to conduct internal validation and authenticity checks, and may need to send the currency to a specialized central processing office. This verification stage can take anywhere from several days to a few weeks. Finally, a detailed record of the entire transaction, including the date, rates, and all fees, should be maintained for personal financial records. One of the most critical aspects to understand when exchanging any exotic or liquid currency is the nature of the fees and spreads involved. Banks and exchange services typically apply a much wider spread, the difference between the rate at which they buy and sell a currency, compared to major global currencies like the euro or the Japanese yen. This markup can range from a few percentage points to, in some cases, double-digit percentages. This reflects the higher cost, risk, and administrative burden associated with handling less common currencies. It is advisable to ask for a written breakdown of the costs, clarifying how much is attributed to profit margin, processing, and commission, to ensure full transparency. Given the potential for significant variation in fees and rates, diligent comparison between multiple financial institutions is a prudent measure. A seemingly small difference in the fee structure or the offered exchange rate can translate into a substantial financial difference, especially when dealing with large sums of currency. Individuals should take the time to shop around among reputable and licensed institutions to find the most favorable terms available. Throughout this process, prioritizing transparency and dealing with established financial entities is paramount. A willingness to ask detailed questions and demand clear, written confirmation of all terms can help ensure a fair and secure transaction. Individuals seeking to exchange sizable amounts of Iraqi dinar should be prepared for a heightened level of scrutiny from financial institutions. This is a standard global practice and is not unique to the dinar. Banks are legally obligated to adhere to strict anti-money laundering (AML) and know your customer (KYC) regulations. As part of this compliance, they will almost certainly ask for documentation proving the legitimate origin of the funds. Having a clear and verifiable paper trail, such as original purchase receipts, bank statements showing the withdrawal for the purchase, inheritance documents, or other official records, can significantly expedite the process and reduce potential friction with the bank's compliance department. To conclude our comprehensive overview, the situation surrounding the Iraqi dinar in 2025 remains complex and multifaceted, without any officially confirmed changes to its valuation. However, the observable shifts in Iraq's monetary policy, the dynamics of its crucial oil revenues, the behavior within parallel currency markets, and the evolving sentiment among international investors suggest that the foundational elements for potential change are being carefully watched. While any significant policy shift may still be some months or even years away, the indicators for such a development are becoming more defined and are being analyzed with increasing interest. Thank you for joining Dinar Daily. We encourage you to like, share, and subscribe for continued factual and up-to-date information as this important economic story continues to develop.